How you guys doing? On this video, I want to bash the banks again. For the people that don't understand what happened to the U.S. economy, it all started. It actually began with the crisis that we had in around 2000, and Greenspan lowered the interest rate to save the economy falling into a recession from the stock market crash, which is perfectly fine. However, he lowered the interest rate and keep it low for too long, and during the time, that's when we have the housing inflation. Basically, the lower interest together with the fake appraisal report done by the banks and the appraiser companies inspire people to buy houses because everybody could afford it, and because of the demand, and because the strong demand, the housing price kept inflating. That's how we end up with a housing bubble. However, the Federal Reserve at the time was Greenspan. He could have just upped the interest rate and make the economy cool down, at least cool down the housing bubble, but he didn't. So we kept inflating until we got to 2006. 2006, that's the beginning of the government starting to up the interest rate because the housing bubble was getting ridiculous. If you bought houses or so during those time, you know what I mean. So that's when they decided to put the brakes on the interest rate. They started to hike the interest rate, but they did it too fast, which had a deflating effect on the housing bubble. In other words, popping the balloon. So that's when we saw the housing price started to dramatically come down during the 2006, the end of 2006, and throughout 2007, and of course this year. If you look around in your neighborhood, you probably see a lot of foreclosure signs, because first of all, the SEC didn't regulate the banks. It's a very complicated problem. At first, the Federal Reserve shouldn't lower the interest rate for that long. Then second, when the interest rate was low, banks were doing fake appraisals and accepting fake loans and lending out just about anybody. And SEC, who regulates the banks, wasn't regulating. And banks were holding those mortgages like they were worth something when they're not, because they're inflated. And the rating agencies on the banks and on the on the bonds and on everything else wasn't rating using the updated standard. And who's regulating the rating agency? Again, SEC. SEC didn't regulate the banks and didn't regulate the rating agencies. The rating agencies didn't regulate the banks, and the banks didn't regulate the mortgage lenders, the mortgage company, and the appraisers. So no one's regulating. Now, for you that bought a house, again, in on my other videos, if you bought the house using your own money, you did everything right, you're getting screwed big time. And who's screwing you? Well, the SEC, the rating agency, and mostly the banks. Check this out. The banks, they took the bad loans from everybody, right? Because banks could borrow money from the Federal Reserve at a very cheap rate. They could borrow up to 30 times what they have. So if they have $1, they could borrow $30. Or if they have 1 billion, they could borrow 30 billions. So they could borrow a lot of money. So they lend out all this bad loan to people, right? And essentially killing people who doesn't know about finance. And people don't know finance, they'll borrow the loan because they don't know what's going on. They end up in foreclosure. And they end up bankrupt. I don't know. They might end up divorced. Their kids leave them. I don't know. So whose fault is it? Like, okay, it's their fault. But why should the bank lend them money? If the bank would check and do everything proper and legal, they wouldn't lend them money. But they did. So they killed those people, and those people foreclosed. Now, when they foreclose, it knocks the market down. It knocks the housing market down. And when people lose money, people get this negative feeling they don't want to spend, to bring the economy down. Together we have already a slowing economy, when inflation, a new term called inflation or something. But anyways, so the banks take the house back and they freaking sell it. They freaking sell it at the auction, or they freaking foreclose the house, which will bring your house value down dramatically. I'll give you an example. My grandma's house, it was appraised properly at 430,000 within the recent 3 months, because there was so much foreclosure around, not on, but around her street. Her house value is now 229. I mean 290,000. So her equity just got decreased about 40%. Okay, and that's good, because I could give you more example people who bought their home which their equity actually decreased more than 100%. So they owe more than they own, so this is crazy. And the banks created this problem by overlending and overselling the property that they got back. Now guess what? Because they made a big mistake, right? And the government want to save them by creating lower interest rate. This way, it minimizes the risk the bank has to take to lend out money again. But banks this time, they get the money from the federal government, they borrow the money from the government, but they're not using the money to lend out to people who actually wants to buy, to help the economy grow, to help company get money and grow. They're not doing that. You know what they're doing? They're getting the money from the government at a very low rate to cover their own asses. They get the money from the government. What they do is they keep the money to themselves and pay off the debt, and not lending any of the money out to people who want to buy a house or do business. So basically, they created this problem. And now they got the money, the lowest rate from the government, and they don't want to. Lend people money. They don't want to give out the money, which the government are intended to do that, because that's why they lend out the banks so much money for so little rate, because they want banks to lend to people who want to do business or buy a home. But bank doesn't want to do that, because they made a mistake. They want to use the money, keep it to themselves, cover their asses, and slow the economy. So our economy is not growing, it's not recovering, it's having so much problem because the bank overlend and now they don't want to lend, but they have the money. Jesus, they have so much money they could lend out. The mortgage on the 30-year mortgage right now with a credit score of 690, they should be able to lend out the rate at 6.5. I'm sorry, 5.5. They should be able to get it at 5.5% for somebody with a decent credit score. But they're not lending it out. They're keeping all the money to themselves, and if somebody wants to borrow with a good credit score with a heavy down payment like 10 to 15% down, they're lending it out at a 6.5 or 6.25 rate, which is about 1% higher than they should be lending it out. And believe me, they have so much money. They got so much money from the Federal Reserve. It's not even funny, and they're not even helping the economy, which they solely, not solely, they probably have 50% responsibility to what happened to the U.S. economy, which we are in a recession. So this is, bullshit. This is really bullshit. And the SEC really needs to get on the bank's ass and get on, the mortgage lenders' ass, and get on the rating agencies' ass, because at this time we're in the crisis. But after this, somebody needs to go to jail, somebody needs to get fined big time, because this is just bullshit. This is fraud. For you guys that doesn't know what's going on, this is fraud, basically fraud done by the banks and rating agency, all the mistakes or whatever. But this is, legally, it depends on the federal government, but if you think about it, this is completely fraud. If you were to do this to someone else, you would get sued, you would go to jail, but they could get away. This is serious stuff. If it wasn't for the federal government putting so much money into our economy, we would have gone into a crash. We would have jumped into a 1987 or worse crash. This is pretty serious stuff, and banks need to be held responsible.